Can you share some thoughts on the upcoming presidential and congressional elections? What are the potential outcomes and how will they affect markets?
So people are always interested in politics, and I'll speak to the elections. More importantly, I'll speak to elections' impact on markets, which are really more about how markets work than about the elections. First, stepping back, if you think about the elections themselves, it's really important when you then would step from that to markets to separate your own ideology, whatever it may be, from thinking that that actually impacts markets at all, because almost none of us have ideologies that are truly very unique or different from so many other people's. And there's lots of people that lean on the right and lots of people lean on the left, and markets are pre-pricers of all widely known information and opinions. So all that stuff gets pre-priced really well. Markets are really good at doing that. But when we look at the election itself, there's some things I think that you can say that are important. And one of them is just that in this election, as much or more than most, people have really firm views at the presidential level about what they think of the two candidates. And the proportion of the culture of voters that might change their mind is less than normal, simply because opinions about President Trump and former Vice President Biden are long and strong and deeply held. The real part that's hard to know is across the swing states how good the ground games of get out the vote will be for either party. If I had to make a guess, which I would not have much confidence in, my guess would be that President Trump gets reelected with about the same numbers, not very different than he did last time. He might lose the popular vote by a little more than he lost it last time and win the Electoral College by a little bit less. But I don't have much confidence in that. That's a guess. It's not a forecast. There's still the potential for a lot of things to go crazy between now and then. The fact is, and I've said this many times before, I've written about this at length, Vice President Biden isn't the kind of candidate the Democrats have ever won with. And I'm not talking about the peculiarities of Vice President Biden. I'm talking about the normalcies of Vice President Biden. The Democrats have only ever won the presidency since the Civil War with someone who was already somehow, some way president, or someone who 4 years earlier in the prior cycle, no one would have contemplated at all as a potential nominee, much less an early frontrunner in the subsequent cycle. That's true of the original poster boy, Grover Cleveland. It's true of Woodrow Wilson. It's true of Franklin Roosevelt, and right on down the line to John Kennedy, Jimmy Carter, Bill Clinton, Barack Obama. Whenever the Democrats have run former old war horses, sitting vice presidents, past vice presidents, people that have run before, they've always lost. And partly that's trying to get the youth vote to be enthusiastic. And particularly in the kind of COVID environment we're in, it's hard to get that youth vote to be very enthusiastic. Simply, it's hard to get the rah-rah spirit up that they had for Barack Obama, that they had for John Kennedy, et cetera, Bill Clinton, et cetera. The fact is that still, however, there's a lot of potential for surprise. Now, here's the surprise. The surprise is that markets don't really care. The surprise is that the real issue is about the timing of the returns. There is a long history of this. The investor class is much more leaning to the right than it is leaning to the left. And there tends to be this view that the Republican candidate is more business friendly, more free market oriented, more anti-regulatory, less prone to government spending, whereas the Democratic candidate is typically seen as the reverse. More prone to spending, more prone to regulation, more anti-business, more anti-rich. And those views whether they're right or wrong at any particular point in time, tend to reflect themselves in markets pre-pricing. So in years when we have elected Democrats, there is a consistent tendency for returns to be a little lower than when we've elected Republicans. But then in the inaugural year, that's flipped. And in the inaugural year, Democrat returns tend to be very high, and Republican returns tend to be low. The two put together tend to be very similar, very tight. And that timing difference is because the reality is presidents don't get to do nearly as much as they say they're going to do. They never do. The fear or hope that you may have for them, whatever it is, tends to get squashed in the inaugural year. In that, in the most successful of presidents, they've gotten much less done in their first year than they ever thought, because our system is set up not to let them do that. And this year that will be, and next year, that will be more true than normal, because the congressional races are going to get very tight. It is possible that the Republicans take the House. It is possible that the Democrats take the Senate. It is possible to get a government with both chambers Republican and the presidency, or both chambers Democrat and the presidency. But in Congress, the margins will be very, very thin. It's possible for them to take it, but it's not possible for either to take it with a wide margin so they could put a lot of legislation through. What that means is that whatever you think of President Trump and whatever you think of Joe Biden, whether they win or whether they lose, they won't be able to do as much as you hope or fear. And when the market realizes that, if you think President Trump's great, next year, if he wins, you'll be a little disappointed at what he can't get done. If you think Joe Biden's terrible, next year, you'll be pleasantly surprised at what he can't get done. And therefore, those two, which get pre-priced in the election year, tend to flip in the inaugural year, and it's really just about the timing of returns. This is a bull market. This is a new bull market. New bull markets don't get derailed easily, and this presidential election in those ways is almost more stereotypical than you could possibly imagine when it seems so unusual. And that's our story, and we're sticking to it.
And for views on current events in the world of investing, visit marketminder.com. Updated daily, it offers on-demand access to Fisher Investments' most current thoughts on capital markets and the global economy, as well as our sometimes irreverent commentary. We hope you will enjoy it.